Good morning, trade pros. Sound check 1 2 1 2. This is your morning market update for December 9th. And we got some exciting stuff for you in today's session, and we're going to set up the trading plan and some levels for the day. All right, so let's dive into it. Markets today in Asia, Japan, Hong Kong, and China are kind of slightly down, less than a half percentage. Hong Kong's down 1.3%, leads the way down. In Europe at midday, London is flat, Paris down 0.6, Frankfurt 0.3% higher, and in the United States, Dow and S&P and NASDAQ all flat as well for this session, which is welcome news after a bit of a sell-off yesterday. Crude oil is up 0.2 point, gold is up 0.4%, and Bitcoin is down 1.8% to $90,000. It's a funny quote always for me, Bitcoin. Yesterday's session, let's review it really quick. We got to kind of know the catalyst for yesterday's session. Sometimes people say, why would you review the news from yesterday after the morning market update? Isn't it more important to see the news for the morning? And the answer to that is yes. Today's news is always more important, but yesterday's news on a day that moved lower is important because if you know what drove the market yesterday, then you kind of know what could stop the slide today and the skid and the reversal to it. It's always important to know the catalysts and to tune into them. All right, so yesterday, we got a mildly hawkish shift in rate expectations, and that's where we had some troubles, all right? And because the market is pricing in a cut for December for the Fed tomorrow, all right? Tomorrow's the Fed day, but a hawkish cut wouldn't be good, meaning here's the cut that you expected. Going forward, we're going to cut less. The market is going to have a hissy fit over that because, yes, it gets 25 basis point cut, but it would rather get 25 basis point cut and steering expectations for more cuts in the future. All right, and Hassan's comments didn't help considering he's going to be likely the front runner for the position, and at this point it's a foregone conclusion he's going to be the next Fed chair. In May, though, he said the following. All right, the Fed chair's job is to watch the data and to adjust and to explain why they're doing what they're doing. He said on CNBC yesterday. He said, and so to say, I'm going to do this over the next 6 months would be irresponsible, really. And the market threw a hissy fit over that. What was he supposed to say? Realistically, this guy's coming into a job in 5-6 months, and they're starting to talk to him like he's a Fed chair now. Like, what is he supposed to say? I'm going to start cutting rates in 5 months? We don't know what the global outlook's going to be. So he said the right thing, but he disappointed the market because they assumed President Trump's guy's going to just step in and start cutting rates willy-nilly and psychotically. But, you still have to be qualified for this job. And I don't know, what was he supposed to say? Oh, you just wait until I take Powell's job. And I'm going to cut like I'm on Ozempic. Is that what you want him to say? I don't get it. Market, had a bit of a hissy fit. It sold off. And it's starting to price in an increasingly hawkish Fed next year, even with Hassett at the helm. This is all important because tomorrow we get the Federal Reserve Open Market Committee's decision on interest rates. We're going to get a dot plot. We're going to get SOPs, Standard Economic Projections, and so much more. So we have a lot of stuff to look forward to tomorrow. It's at 2 p.m., but tomorrow morning's trading session is going to be a little bust. All right. In today's session, and what's driving in the news is NVDA. Donald Trump gave NVDA permission to ship its H200 chip to China in exchange for a 25% surcharge, aka a tariff. All right. A move that allows NVIDIA to kind of regain billions of dollars in lost business. All right. He also said, Donald Trump, that would only go to approved customers, these H200 chips, and that China's President Xi allowed this and was on board. It's all great. It's all amazing. It's fantastic. It's great news for NVIDIA, but there's only one problem. It's a pretty big problem. China announces at 5:40 in the morning that it's set to limit access to NVIDIA's H200 chips, despite approval from U.S. President Trump. No decision has been made on the matter. So NVIDIA trims its pre-market gains, now up just 0.5% from previously posted gains of 1.5%. So we had an anchor this morning in NVIDIA. It was going to be great. We were going to pull up the chart of NVIDIA. Say as long as NVIDIA is bidding NVIDIA, as long as we're getting an NVIDIA upward, then it's good. The market's probably going to follow, but we kind of lost that engine for us to push the market a little bit higher. So now you kind of start to balance things out and you say, hawkish Fed yesterday. Why is George talking about yesterday? Well, hawkish Fed expectation. All right, we have a Fed meeting tomorrow. Downside going to the Fed meeting. One is you don't want to hold on to positions and put them at risk of a Federal Reserve decision willy-nilly. Okay, there is more likelihood for a hawkish surprise, which is bad for stocks, and that pushes funds, investors, and people who are not just trying to pick up pennies in front of steamrollers like us, who have positions that are very sensitive to movement in the market around the holiday season with thin volatility or thin volume. All right, it puts them in a position where they'd rather sell some, and that's what we saw yesterday. Right, you can explain it however the heck you want, but heading into Federal Reserve meeting that's in December with 15 trading days left in the session, 5 of which are going to be completely bogus. All right, so just over a week of actual trading days, you're going to trim. You're going to start trimming the portfolio for a Fed event, because if the Fed surprises hawkish, and yesterday it looks like they're moving towards a hawkish surprise, you're going to have to do it post-Fed announcement. And if you think the liquidity is thin in the market now for the holidays, wait till you see post-Fed liquidity into the holidays. Right? This is why you're seeing trimming of some portfolios on the news yesterday and an expectation of hawkishness tomorrow. Now, it might turn out that they're not actually hawkish. Powell might surprise us positively, but we're starting to build an expectation that he won't. So more on the Fed tomorrow. Tomorrow I'm not trading in the morning, but I will do a morning market update with you. I don't trade Fed days. It's just a personal rule. All right. So NVIDIA, we lost that engine. All right. Wait, what am I doing here? Today's economic reports, we got JOLTS at 10 a.m. That's the next big one. All right, the expectation is for the number to come out at 7.15. All right, the prior was 7.227. JOLTS are typically not a big number that's followed too much. It's just an early look at the Friday 80 or non-farm payrolls report that we haven't gotten in a while. So JOLTS is kind of the last data point we're going to get. I don't think the Fed is even going to consider it at their meeting tomorrow. So it's slightly irrelevant, but it's an early look at the jobs market and where we're at post-government shutdown, and it could be used for some forecasting into the future. But that's all it is, just a forecast. All right. And then that's all we got. We got some 6-week T-bill auction, yada, yada. It's not going to be important. Let's turn around and set up the charts and trade for the day. Oh, did you guys like my star on my shirt? Morning, Marco. Morning, Michael. Look at the star here. My kids yesterday were cleaning up, and we have a reward system for them that my wife implemented. There's no mic. My kids cleaned up yesterday, and we have a reward system for them that my wife implemented. So they cleaned up, and they said, she goes, "You guys get a star," and I'm like, "Oh, that's so cute. Do I get a star?" And she said, "Yes, George, you get a star." And she put one on my shirt. Now I have a star. Haha. Haha, guys, I got a star and you don't. All right, let's get into it. So here is the volume profile chart. We're going to take a look at it briefly, and then we're going to carry on with the rest of the analysis. So yesterday we get a rally upward. We see value is starting to form here in this area. We got quite a bit of resistance at 6,900. I honestly don't expect the market to smash through 6,900 on the first test. I expected to see a bit of resistance and a pullback, and so yesterday was very healthy. Okay, the question is, can we get bullish today in light of a Fed event tomorrow? And I'm gonna say it's possible, but I think in today's market it's a little different in that if you do your analysis and your levels and they normally work and you got a great trading plan and everything seems like a typical day, I think today's gonna be one of those days where your levels aren't going to be that important. I don't think the market is going to care about your levels. What they care about is the Fed tomorrow and then deleveraging the book a little bit going into that event if they haven't already. Normally, portfolio managers and large spec traders know how to handle these events, but when you have a hawkish shift a day before the Fed, day and a half before the FOMC event, you have some surprise repositioning to do. And the repositioning is to the downside. You got to sell some S&P. So in today's market then, I like it. I think it's bullish. I didn't think 6,900 was going to go the first time through. I was kind of foreseeing a pullback, and the pullback is pulling back. All right, we're back pulling, aren't we? The low of yesterday was 68.35, so that puts the low in here. The open yesterday was 68.83, so that's about a 50-point drop spill off of the open, and quick minus 50. Pretty immediate. pretty, consistent on the sell-off. And we saw it early in the day. We saw it hit the book, and it never really let off. All right, our transition level yesterday was 68/70, this yellow zone here. All right, we said that's our flip zone. I want to be bullish above it, bearish below. Well, we break it, retest it, and bearish below was the right call. All right, it wasn't the earliest short opportunity, but it was the cleanest one off of that level in the transition we talked about in yesterday's session. All right, now the next thing here that we're looking at is the 68/70. The beauty of yesterday is that we could use it today. That is the flip zone. So I don't want to be bullish unless I'm bullish into strength above the 70. All right, or if I could pick a low here on an order flow moment, I'll give it a shot. But to have trend extension upward, we got to reclaim that 70 really quick. All right, and look at this, overnight high 68.5. So the bulls weren't able to reclaim a lot of the losses overnight off of the prior day low. Okay, and we are just kind of slightly below the prior day cash close, and the overnight low though is higher than the prior day low. So you're getting an overnight consolidation after a US downward day. All right, the thing we're watching for today is, do we have enough strength? Guys, your trading plan, by the way, best way to build it is to ask yourself questions and answer them. And I'll show you how to ask questions. Do we have enough downside momentum to get through the prior day low? All right. If we do, then there's going to be a spill. There's going to be some downward positioning, downward, sell stops here. People are going to have to reposition, some gamma hedging that has to happen. All right. We're on new lows. So if we get below the 35, you're going to open up some pretty downward biased trade. All right. If we do not, then the next question becomes, okay, if we're not that bearish on today's session, all right, are we going to get extremely bullish? If we get extremely bullish, we got to get above the 70 and keep going. And then we can buy pullbacks. All right, that's the extremely bullish scenario. So that's up, that's down. Now the question to you is this. Do you think we're going to have enough volatility that I want to trade the range? That's the big question, because if you want to trade the range, you could trade the range, but are you going to have enough volatility? And for me, I guess the next two trades is, look, you know the two already. Buy above 70 on pullbacks, sell below 35 on pullbacks. All right, and try to catch a failed low here on the long. All right, or try to catch a short into that level on the resistance. And that's really the four trades. So you could buy the inversion to go bullish on pullbacks above the 70. You could continue shorting below the 35, and you could always play the outer edges of the range. That's on most days. Those are the four trades we really have. For me, what I'm looking for is some formation here of this trade. I'm going to give it some more time on the open than I normally do, and I'm going to wait for my usual order flow patterns at one of these levels, or at two of these levels, 68 or 35, and then allow the order flow to dictate the next move, because I don't know where the big market orders are going to be. I don't know where the big traders are going to be, the big specs, the smart money, the strong-handed participants, all the same thing. But I do know by following order flow, I'm going to catch them. All right, guys, I'll see you in the room. Love you all a bunch. I owe you a hockey jersey. Do I really, Prashant? Marco, I'm going to give you a star for good trades. I'm also going to give you a link to that skate sharpener machine that we talked about, buddy. Don't think I forgot. I just wasn't in Discord. I'm not in Discord. I really hate Discord. Pardon me. I don't mean to be rude and impart my opinions. Discord to me is like, it just makes me feel like I don't have enough money to buy dinner. You know why? Because like it reminds me of the gamer days. Like just being a gamer in my mom's house, playing like Sonic on Sega. You know what I mean? That's what Discord is for, playing Sonic on Sega. Prashant has it too. Bro, I just got the sparks. Anyway, we'll talk in the room. I love it. I love the few first sharpens I've done. I'm sharpening my skates more now than before I had the sparks, because now it's a luxury and I love it. I'll never go back. Anyways, point I'm making here is I'm going to get in touch with you guys. I love you guys so much. Let's move this to the trading room, because we're already discussing trading room stuff. And let's get the day. Today, I'm going to end it off like this. Today, I'm going to get trades that make sense, and I'm not going to push myself too much. In fact, here's breaking news for you. I am done pushing myself for the year. It's December 9th. I don't need to push. All right, I'm going to sit back, relax for the rest of the year, and take the ones that make sense, that aren't high pressure. Because the year to me is already done. And I got some great podcasts coming out as well to help out with that kind of mentality tomorrow. Actually, no, Thursday and every Thursday after, including December and New Year's Eve or New Year's Day. So tune in there. Mind Over Markets podcast. Love you. Take care. Goodbye.